today's video, guys, we are going to be talking about the simple concept of imbalances or fair value gap and mitigation. So let's start with what an imbalance is, right? So an imbalance or a fair value gap or a price gap, right? It's simply a distance between the wicks of three consecutive candles, right? What am I talking about? That distance and consecutive candles, right? So taking an example, this drawing right here, right? So these are three candles, right? Candle number one, candle number two right here, and of course candle number three right here. So within these three candles, as you can see, right? So this is just an example; they are not actual candles, right? So taking an example of a trend like this, a bearish trend, right? So you have candle number one open and close right here, and you have candle number two open and close right here, and then you have candle number three open and close right there. So what we're looking at is how these candles are aligned and how did they open and how did they close. So this open from this high with this wick and from this low with this wick, right? And then another candle opened right here from this high and a low right here. So let's just, like for example, do something like this. So like let's put in this to be it's low right there. Boom. And then finally you have another third candle right here opened with its wick there and down there. So what an imbalance is simply the distance between this from the first wick and the third wick, right? I mean from the wicks from the first candle and the third candle, right? So as you can see, we have this wick here, we have this gap in between here, and then we have another wick here, right? So this actual gap, right? So this is the actual gap that we're talking about, right? From here to here, right? So this is the gap that we're talking about. This is what we call an imbalance or a price gap or a fair value gap. And how does that form, right? A price gap or an FVG forms as a result of an intense pressure in the price action that does not allow price to fully mitigate these orders left behind here, right? So because what we do is for the formation of this wick and this wick right here means that price, when it opened here, bought a little to form this high, and then it sold way down here, caused this low, and then it came back and closed right there. So with price closing here, right, means that this wick now opens and then it buys. Okay, so it buys, it forms this high, and then it sells, it forms this low, and then it comes back and closes there. Okay, and then a third candle comes into play, right, and then it buys, right? So from this buying right here, it means that there were bullish orders, right? There were bullish orders that were left from this low here, this low of the wick, this high of the wick here, right? Because they bought here and then they sold. That's what happened. So if this means that they bought here to here, right, and then they sold, means that there are bullish orders within this area, and not all of these bullish orders have been closed. So what the composite man or what smart money does is try to buy it again, right, to come into these orders, close these orders at break even, right, and then sell off again. Hence the formation of this wick right here, okay, so the formation of this wick right here that does not get to reach this area in which there are bullish orders to the top side means that what there is a very strong bearish pressure that's preventing this high from reaching here. Hence, from that very strong bearish pressure, price will continue selling and then leave behind these orders pending in here with very high negative losses. Now, mind you that the composite man doesn't take losses. So eventually, what the composite man or smart money will do is from a point in the future, after creation of a potential weak low, price is going to buy up here, right, into this previously left imbalance to mitigate these orders and close these orders over time, right? Because the composite man has an infinite amount of money, right? So they don't close these orders until they are closed at break even. So what they will do is try to buy this market off again in the future point where the bearish pressure is actually weak. So they'll step in with a very strong bullish pressure to fill these gaps left behind from the past. And then from there, that is what we call mitigation. And then from there, price can now return back into its original trend, targeting the lows, the weak lows, as their next liquidity run. So with that concept being said, through this theoretical thingy right here with picture perfect examples. So let's now go to the actual live charts and see what's done, right? So what we know is that an imbalance is this gap, and mitigation is simply the process of price coming back to fill this gap. So those are the two concepts, right? Imbalance and mitigation, right? Imbalance is the gap, and mitigation is the process by which the gap is being filled with price. And then from there, price can now continue back to its true trend, targeting the lows as their next liquidity run. So now let's go back to the charts, to the actual price action, and see how does this work. We're on the euro US dollar on the daily chart, and let's just see some examples from here. Now, one thing to know that mitigation imbalances are always there in the market, right? You always see imbalance in and out of the charts, right? Imbalances are always there, and you can't actually only depend on imbalances to trade them. It's gonna be a very weak strategy for you to use. I would not recommend that at any point. And also, a very great concept to conceptualize is that a very great concept to conceptualize is that also mitigation doesn't always happen instantly, right? So you will see price form imbalances, and then price from there would run off for a short or a long period of time, and then from there price will now come to mitigate these imbalances. It depends whether in the near future or the very far future. It's actually inconsiderable and unpredictable, but eventually imbalances are always eventually in due time imbalances are always filled with price action. So that's a very great concept for you to know, so that when you're actually utilizing this knowledge, you cannot get carried away by it. So with that being said, let's now go back and see how can we spot this in the actual charts. So we are on the euro US dollar. So this is like the daily chart, and as you can see, right, so price from here makes a high, comes down, and then breaks this low right here, right, with this breakout structure right here. And from this breakout structure, we now have a high and a what? We now have a high and a low right here. Now, lo and behold, look at what price has done, right? So from here, let's zoom in and see what price has done from that high to the low with the breakout structure. So from here, we can now see that, okay, so as you can see, as I said before, that imbalances are always there in the charts, right? So we have a little bit of an imbalance here, right? That's an imbalance. We have also a little bit imbalance there, right? As you can see, from this wick to this wick right here, this gap in here, that's an imbalance, right? And also we have another imbalance from here to pretty much here, right? We also have that imbalance, right? And then we also have another imbalance right here, right? So as you can see, imbalances are formed in and out of the price action. Why? Because of the very strong bearish pushes, right? As you can see, there's very long bearish candles, right? These indicate that there was a very strong bearish push, right? The bearish volume in these charts was absolutely crazy. That's why these imbalances were being left. Now, when you come to an area that, you know, there wasn't much volume and much movement and much pressure in the market, right? When you come to areas that like these ranges in here, right, as you can see, there's pretty much no imbalances in there. Why? Because the bearish volume and the bullish volume were almost the same, right? So prices going up and down, up and down, up and down, up and down, leaving no imbalances at all, right? So that's what happened here, right? As you can see, there's literally no imbalance at all in this area. Why? Because of the bearish volume equaling the bullish volume. Now from there, as you can see, right, we pretty much have a lot of imbalances in here, right, along with the supply zone here, right? So as you can see, along with the supply zone here. Now, a very good technique of using imbalances is applied together with S&D zones, but that's going to be discussed in another video and not this one. So we're just going to be conceptualizing on the concept of imbalances and mitigation. So from there, you can see that price from this low, right? Price from this low, from here, starts making its way up, 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 comes up, mitigates all these imbalances, right? As you can see, all these imbalances are now filled, along with this order block right here, or supply zone, meaning what, right? All the bullish orders that existed within this area are filled and closed. Hence, what, the bearish volume now, or the bears can now return back to the market and push price down, which is exactly what happens from there, right? So price is pushed back down all the way, forming this low right here. Now, as I said before, that not all imbalances will be mitigated instantly, and others will be mitigated in the future. So as you can see in this area right here, right, we also had imbalances here, but as you can see, this imbalance here, right, price comes up, never mitigates it, and then leaves, right? But in the point of the future, price comes up, right, with this here, right there. That's the mitigation of this imbalance in the future time. So I hope this video made a lot of sense to you guys, and if it did, then don't forget to like, leave that thumbs up, and of course subscribe, and turn that bell button on for future notifications, cause videos will be dropped on a daily basis on this year, guys. I wish you luck, have a great weekend, have a great trading week, and of course guys, stay safe and peace out.